At 9:41 a.m. on a Tuesday in September, James sits down at his desk with a coffee and opens his charts. He is 31. He has been trading for 2 years and 3 months. He has an $8,000 account and a system he has been running for 14 months. The system is not complicated. He trades EUR USD. He looks for 2 setups. He takes them when they appear, skips them when they do not, and logs everything in a spreadsheet he updates every night. His win rate over the last 14 months is 53%. His average winner is 1.4 times his average loser. He is not rich, but his equity curve goes up and to the right, slowly, consistently, without drama. He does not think of himself as a good trader. He thinks of himself as a patient one. There is a difference, and he knows it. By 9:41, the London session is in full swing. He scans his pair. There is a setup forming near a level he has watched since Sunday. Not there yet. He puts his coffee down, leans back, and waits. At 9:58, it prints. He enters. 1% risk. Stop below the structure. Target at the next resistance. He has taken this setup 47 times. It has worked 31 of them. He sets his alert and goes to refill his coffee. He comes back 2 minutes later to a stop-out notification. $280. Gone in 4 minutes. James looks at the chart. The candle that stopped him out spiked down 12 pips, then immediately reversed and went exactly where he thought it would go. If his stop had been 3 pips wider, the trade would be live right now, up 40 pips and climbing. He sits with this for a moment. The loss is not large. $280 on an $8,000 account, 3.5%. He has had bigger losses and moved on. He knows the math. He knows one trade means nothing. He knows the setup was correct. He also knows that the trade worked, just not for him. The market took his money and then did exactly what he said it would do. He closes the trade log. He opens a new chart window. He is not looking for the next setup on his list. He is looking at the same pair, the same candle, the same level. The thought arrives quietly, almost reasonably. I know where this is going. I just got in too early. He is not angry. That is important to understand. He is not slamming his desk or cursing at the screen. He is calm, focused, certain, and that certainty is more dangerous than anger would have been. He enters the trade again, the same direction, double the size. He tells himself it is not revenge. He tells himself it is conviction. He is wrong about both. The second entry moves in his favor for 6 minutes. James watches it tick up, 22 pips, almost at break even on the session. He does not move his stop to lock in profit. He waits. He wants the full target. He needs the full target. Not to be profitable for the day, he needs to be back to exactly where he was before 9:58 a.m., not 1 pip less. At 10:24, the pair stalls, consolidates, then drops. He watches his profit evaporate. 22 pips, 15, 8, break even. He does not close the trade. The trade closes for him at 10:31. Stop out, $480. His largest single loss of the month. He is no longer calm. He does not notice that 41 minutes have passed since his first trade. He does not notice that he has already violated 2 rules: no doubling size after a loss, no re-entering the same setup in the same session. He is not thinking about rules. He is thinking about $660, the number that his account is now missing, the number that needs to come back. He pulls up the chart. He finds another entry. It is not one of his 2 setups. It does not look like either of them, but the structure, he tells himself, is similar. Close enough. He enters. By 11:15 a.m., James has made 7 trades. He was supposed to make 1 today, maybe 2. Each trade has its own story, its own logic, its own reason, its own brief moment where it looked like it might work. But the stories are getting shorter and the logic is getting thinner. The third trade stopped out in 9 minutes. The fourth came back to break even and he closed it for 0 because he could not take another loss. The fifth was a counter-trend entry that he knew, somewhere in the back of his head, was not in his system. He took it anyway because the chart looked like it was reversing. It was not reversing. It was pausing. By 11:15, he is down $1,400. He opens a new position at 3% risk. He has never traded 3% risk in his life. He knows what 3% risk means. He knows that 1 loss at 3% is $60 worse than 1 loss at 2%. He knows the math. He is not thinking about the math. He is thinking about a single number, $8,000, the number on his account statement last Tuesday, the number he needs to return to. He is no longer analyzing the chart. He is staring at the P&L. These are not the same activity. They look the same from the outside. A man at a desk, looking at screens, but one of them is trading. The other is something else entirely. The position moves against him immediately. He watches it. He does not close it. He watches the P&L number fall. -90, -150. He moves his stop back, not by a lot, 40 pips, enough to give it more room. He tells himself the market needs space to work. The market does not need space. It needs him to leave. Stop out at 11:31 a.m., $740, his largest single loss in 2 years of trading. He sits very still for a moment. Then he opens another chart. Here is what revenge trading is not. It is not stupidity. James is not stupid. He has a working system, a real edge, a track record that proves he can manage risk. He has made rational decisions hundreds of times. It is not greed. He is not trying to get rich this morning. He is trying to get back to where he was at 9:57 a.m. He is trying to undo something. That is what revenge trading actually is. It is the psychological need to resolve an injustice. When James lost $280 on a valid setup, some part of his brain registered not a trade outcome, but a wrong answer. A theft. The market took something that was his, a trade that worked, that he read correctly, and gave the profit to someone else. The drive to get it back is not rational. It is the same circuitry that makes you lie awake at 2 a.m. replaying an argument, saying the things you should have said. You cannot win that argument. The conversation is over, but the brain does not care. It needs resolution. The problem is that the market is not an argument. You cannot replay it. You cannot say the right thing this time and change the outcome. Every new trade is a new and separate event. The market does not remember what it did to you at 9:58. It does not owe you anything. James knows all of this. He has read about it. He has probably nodded along to a video exactly like this one. Knowing is not the same as feeling. And at 11:31 a.m., he does not feel like someone who knows things. He feels like someone who is owed. The 8th trade stops out at 11:47 a.m. The 9th trade, the last one, is entered at 12:09 p.m. at 4% risk. James does not consciously choose 4%. He types the number into the position calculator and does not register what he is looking at. His hands are moving faster than his thinking. His jaw is tight. His coffee is cold. He is not watching the chart anymore. He is watching the number. The number falls. He moves his stop. The number falls further. He watches it cross $2,000 of drawdown for the day. He watches it cross 2,200. He watches it cross 2,400. At 12:33 p.m., the position closes. Stop out. James sits at his desk and does not move for 4 minutes. His account is at $5,260. He started the day at $8,220. He has lost $2,960 in 2 hours and 52 minutes. On a day that started with one valid trade, one stop out, and $280 of normal, acceptable loss. He closes his laptop. He does not reach for his phone. He does not open his journal. He just sits there. Outside the window, it is still Tuesday morning. Somewhere, the euro-dollar is still moving. Up or down, he cannot tell you. He stopped watching it at 11:15. James does not trade again that week. Not because he sets a rule, because he cannot make himself open the charts. Every time he tries, something in his chest locks up. It takes him 3 days to understand that the feeling is not shame about the money. It is shame about the gap, the distance between the trader he thought he was and the trader he was on Tuesday morning. He reads his own journal, the entries from the past 14 months. He finds one from April that says, "Had a bad stop out this morning. The urge to re-enter was strong, did not, went for a walk. Setup appeared again in the afternoon, took it correctly, small win." He wrote that. He was that person. He opens a new page in his journal and writes one rule, just one. He does not write 10 rules or a manifesto about discipline. He writes one line. After any stop out, the platform closes for 30 minutes. Not because he will always be emotional after a loss, but because he might be, and he cannot tell from the inside. 30 minutes costs nothing when he is fine. And when he is not fine, 30 minutes is the difference between a $280 loss and a $3,000 one. He returns to trading the following Monday. He takes one trade, it loses. He closes the platform for 30 minutes. He goes and makes coffee. He comes back and the urge is gone. Not suppressed, not white-knuckled away, just gone. Because the brain that needed to resolve the injustice has had time to remember that there is no injustice. There is just a trade that did not work. He finishes the week up $60. It is the least meaningful $60 of his career. And the most important, the account James lost those $3,000 from was not a simulation. It was real money, real months of work, real discipline, accumulated trade by trade that evaporated in a single morning, not because his system failed, but because he stopped using it. The system never stopped working. He just stopped trusting it the moment it gave him a result he did not like. Every trader reading this has a number, a loss that feels like too much, a stop out that arrives with a spike candle at exactly the wrong place at exactly the wrong time, and that quiet, reasonable voice that says, "I know where this is going, I just need to re-enter." That voice is not your edge talking. That is not your analysis. That is your brain trying to win an argument with a market that will never answer back. The platform does not need to be open. You do not need to get it back today. Close it. Make the coffee. The chart will still be there in 30 minutes, and so will your account.